Traders, Gary Wagner here, approximately 11:17 in Honolulu, 4:17 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is the 10th day of December, 2021, and this is the daily report for gold and silver. Traders, well, it is official. The CPI inflationary index came out, and as economists predicted, we saw a surge in inflationary pressure. In fact, inflation has accelerated at the fastest pace since 1982 in November. Gold, which I expected to go higher, but a little bit higher than we are seeing, did tick up today. Currently, 1783.10, up $6.40, about a 0.4% increase. The high came in at 1791 and the low at 1770. Silver futures gained almost a full percent, 0.92%, with the most active COMEX contract currently fixed at $22.21.5 after factoring in today's 20-cent gain. And gains in both gold and silver were added by some tailwinds provided by dollar weakness. The dollar lost approximately 0.2%, or 18 points, and is currently fixed at 96.065. The first graph that we are looking at, and all of the graphs we're going to show you today, are from the U.S. Bureau of Labor Statistics. This is the 12-month percentage change of the CPI with selected categories. The graph illustrates the last 20 years, and I draw your attention to this large spike that began in November of 2019. This, of course, takes us up to November 2021. What is quite revealing about the chart that we are currently looking at is that it does, in fact, break down the various components that cause these record levels of inflation, food and energy being the two predominant categories. The takeaway is that the consumer price index increased by 0.8%, taking the year-over-year to 6.8%, the highest level in approximately 40 years. This is the official press release from the U.S. Bureau of Labor Statistics, and it basically says that the consumer price index for all urban consumers, the CPIU, increased by 0.8% in November on a seasonally adjusted basis after rising 0.9% in October. The U.S. Bureau of Labor Statistics reported today. Over the last 12 months, all items in the index increased by 6.8% before seasonal adjustment. So what does today's report mean? One, we are at a record level of inflation. Two, I believe that inflationary pressures will only mount in the upcoming months. And yesterday, I put out a video, a kind of what if we actually saw the CPI at 6.8%. And I will replay that now to kind of put today's report in perspective. In my mind, it is all about the CPI inflation index numbers that will come out tomorrow. We came in at 6.2% last month for the month of October. It was the first occurrence of inflation levels at that rate since November of 1990. It is now forecast that we'll see an uptick of 0.07%, which means that would take the year over year to 6.8%. And the last time we hit that was in the mid-1980s. If you recall, in the beginning of 1980 through 1983, we had a tremendous bout with inflationary pressures. It led to one of the worst recessions since World War II, and it was based upon supply chain shortages, but the supply chain shortages were embargoes by Iran, and it had to do with oil. So while there's different reasons for the recession that occurred then and the recession that is occurring now, the result in both cases have been inflation that we haven't seen in years. Now, what is the takeaway? When we look at the chart of how long it took the U.S. government to bring inflation down to normal levels, it was a 3-year process. I'm putting up a listing of the various levels of inflation through the 80s. And why that is important is because if it comes in at the forecasted level of 6.8 or higher, we have some challenges. And the challenges are that no matter how aggressively the Federal Reserve is, one, we know that it will cause an economic contraction. It will cause issues that way. But more importantly, it will be a multi-year process. While the inflationary pressures in the 1980s were much more extreme than they are now, it still took over 3 years to normalize rates. Now, we're at the end of 2021. That means that if it takes 2 or 3 years, we will not have inflationary normalization till 2024, 2025. In the meantime, what do you think that will do to the price of gold? And that's why I believe tomorrow's report is so very critical. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow on Friday for the weekly wrap-up and review. Bye-bye.